Okay, so let's make a full breakdown of the situation that we currently have on Euro CAD. So on the Euro CAD, starting from the monthly time frame, we have a market that clearly had created this overextended W formation. Now, after a market creates an overextended W formation, what you expect is for the market to actually make a move to the downside and go and retest the start of the pattern. Why? Because the start of the pattern is the previous resistance, which is now turned support. So the completion zone of an overextended W formation. Now, in this case, where is this start of the pattern? The start of the pattern is exactly here, down, up, down, up. So this is exactly the previous resistance, now turned support. Now, the market created this huge impulse to the upside. So the impulse creating the last leg of the W formation, and we expected a retracement to this zone, which is exactly what the market did. And then from here, what did we expect? We expect the market to start a continuation to the upside, which is exactly what the market has done. Specifically, if you want informations on this retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse, and you can see that the market retraced exactly to the 50% retracement, which was lining up perfectly with the previous resistance, not turn support, aka the completion zone of the W formation. Going down on the weekly time frame, what did we have? On the weekly, we could clearly see that the market was shifting from creating lower lows to creating higher lows, and we definitely expected the market to give us a nice push to the upside, which is exactly what the market has done. And going down on the daily, what we could see now on the daily time frame, it was pretty clear that we wanted to see the market first. Okay, from here, what did we say? We said from here we wanted to see the retracement to retest this previous resistance here, now turn support here. We wanted to see the market give us this retracement and then create the continuation to the upside. And I will link in description the previous analysis in which I said when the market was here that we wanted to see a retracement to this level and then the continuation to the upside. And then again, we spoke about EuroCAD when the market was here, saying that we definitely expected the market to give us this move to the downside to go and test this zone. And I will link also this previous analysis in description so you can go and check it out. And why did we want to see the market go and test this area? Because inside of here, we had this candle. Now, why is this candle very important? Because in all this move to the upside, there is one candle which is not related to this move to the upside, which is exactly this red candle, meaning that this is a very strong demand area for EuroCAD that we definitely expected the market to go and test and then reject to the upside, which is exactly what EuroCAD did. And if you already found a nice entry inside of this area for a long, I suggest that you continue to run the trade. However, you go risk-free on the position. And why do I suggest that you go risk-free on the position? Let me explain. Now, before I show you why I suggest that you go risk-free, let's go and give a quick check at what we have from a Euro and a CAD perspective. Starting from the Euro, what do we have? We have a market that went from, we had institutions actually, that went from having 147K longs on the Euro all the way up to having 242K longs. So basically, we had a lot of longing from an institutional perspective. So hedge funds have been longing the Euro. And we can see that net positions went from minus 114K all the way up to plus 157K. So from having more shorts than longs to having more longs than shorts on the Euro. And if we go and see what we have on the CAD, we can see that on the CAD, institutions have been lately buying the CAD, going from minus 35K to minus 12K net positions. And obviously, we have a new report coming out today, and we will see what kind of situation we have also on the CAD. However, the CAD has been bought and the Euro has been bought as well. However, it is very important to mention that on the Euro, all these longs have already been reflected in the market. In fact, all Euro pairs have been trending to the upside aggressively, including obviously Euro USD. Therefore, we can expect some profit taking on this long. And considering that also the CAD has been bought lately, is definitely a possibility to see EuroCAD actually from here make this move to the downside, specifically because from a monthly and weekly perspective, we have quite strong resistance at this area. Where is the resistance that I am speaking about? On the monthly, we can see that this zone here has been acting as very strong resistance. It was resistance here, resistance here, resistance here, and again resistance at this area. And on the weekly time frame, we can see that, as we have already said, actually, we are at the previous high. So if you are already in the long, continue to run the long risk-free. If you are not in the long, don't long from here, because we are in the middle of nowhere, so it would make no sense. Because if from here the market will go to the upside, perfect, the long will play out beautifully. However, if the market from here will make the move to the downside, because institutions start taking their profits on the euro longs and continue to add longs on the CAD, so CAD continue to get stronger, then euro CAD will provide a beautiful opportunity, because if the market will actually make this move to the downside here, there is a very good opportunity, because at that point, what the market will have created is this M formation. And if the market will create this M formation at that point, from here, we definitely expect the market to make a move to the upside to complete the pattern at the previous support, not on resistance, aka the neckline of the formation. And also on the weekly to actually try to complete this impulse correction and impulse pattern to the upside. So if the market from here will go to the upside, it's perfect. If it will go down, at that point we will have this M formation. And with students, what we will be doing inside of this area on the 4-hour time frame, we will be waiting for the market to shift from a bearish to a bullish market. And as soon as the market will shift from a bearish to a bullish market and provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of the pattern at the previous support, now turned resistance. And obviously, monthly, weekly, and daily, as usual, combined with the COT data, are the best time frames when it comes to the direction of the market. But the 4-hour is the best time frame for entry, and that is why we will be monitoring on the 4-hour inside of this area for the potential long. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.